This is Ag Matters PM from the Iowa Agribusiness Radio Network, brought to you by the Iowa Soybean Association. Your daily recap of the information that affects Iowa's farmers, producers, and consumers, right here in the heart of the heartland. With reports from our award-winning broadcast team of Dustin Hoffman, Riley Smith, and Mark Magnuson. Now, from the IARN studios in Des Moines, here's Riley Smith.
Good day and welcome to Ag Matters PM on the Iowa Agribusiness Radio Network. I'm Riley Smith. Today is Monday, January 22nd of 2024, and it's hard to believe we're already almost through the first month of the new year. We're so glad you could join us for today's show. In today's episode, I run down some of today's latest ag news headlines, including some announcements from Ag Secretary Tom Vilsack. But first, let's run down the ag market recap.
It's time now for the Ag Matters PM Closing Market Summary, your source for market analysis and settlement prices from the day's trade in Chicago, courtesy of the folks at agmarket.net.
At the end of another trading day in the ag marketplace, we're here with Tyler Schau of agmarket.net. First off, Tyler, what did we see going on in the grain markets today?
A little bit of life in the grain markets. They kind of feel like they're trying to pick up a little bit of momentum, a little bit of struggle for corn. And wheat, corn's going to basically close the day completely unchanged. We did see some strength in beans, up about a dime in your March contract, as well as your May and July. So a little bit of positive news, not just a ton of news out there to really drive these markets one way or the other. So kind of still caught in that same spot we've been for the last several weeks. The one thing I think a lot of people are looking at or kind of paying close attention to, we did get the commitment of traders report last week, and we added to the corn short by the managed money, we added the bean short, we added the wheat short. So you've got managed money crowd that is short. In fact, in corn, it's the shortest position they've had for this time of the year since 2017. And in 2017, the December 2017 contract did rally about 25 to 30 cents from January into March, based on those funds exiting their shorts and actually going to a long. Now, that doesn't mean they're going to do that again. And I do think that one of the reasons that rally was only 25 cents when they flipped the boat like that was it was met with farmer selling when we did get the rally. So do recommend, if you've got more grain to sell, have orders working or some tool that pulls the trigger for you, because if we do get a rally, it may not last all that long.
Well, of course, with this time of year being just a little fickle on the side of the marketplace, big thing we're looking at is that global demand. Now, obviously, a big focus we've had recently has been with the price comparisons with Brazil. Now, we also did see on Friday finally an official purchase of grain from China. So are we hoping that maybe we can see a little bit more of a pattern there? China has been absent for a little while, so maybe an uptick in global demand from that?
Yeah, I mean, that's what a lot of people are hoping for. It was a little bit surprising. One of the reasons a lot of people had for beans being down as hard as they were earlier in the week and midweek was talk or chatter that China was going to cancel some U.S. purchases and move those to origin of Brazil. So then to hear news that China came in and bought some beans last Friday, that provided a little bit of life and a little bit of spark. We're going to need to see them step in and buy some more beans. We need the bean. We need to see some export demand. We need to see some demand, period. And it's just been a real struggle to come by and really all the grains. And then bear in mind, right now the USDA has got a pretty low bar set for an export target of 1.7 billion bushels. And comparatively, at least compared to the last several years, that's a pretty low bar. The one silver lining with all of that is we do have renewable diesel that's, more and more plants are scheduled to come online over the next several months. And in fact, we got a story that a fairly sizable one out of California finally got the green light to open here as of this weekend. So that might provide a little bit of support as we start turning more soybeans and then oils into diesel. That's going to help.
And then looking on the other side of the marketplace in the livestock complex, Tyler, what do we see going on there today?
We had a cattle on feed report on Friday. It basically came in exactly as analysts had expected. That's the first time we've seen that in several months. Been a lot of expectations of coming in somewhat friendly, and they came in really bearish there in October, November, and even into December. So it was a bright light for the cattle complex to get that cattle on feed report and have the analysts nail it. Placements came in below last year, and remember, last year we were at 92% of the year before. So that means, even fewer cattle got placed in the month of December in 2023 than in 2022, which was a huge drop from the year prior. So that kind of created a floor. It was kind of one of those odd things. I talked to quite a few people Friday evening and Saturday evening, or Saturday morning, excuse me, and the overwhelming talk amongst cattle producers and hedgers was, well, this should be friendly cattle prices. And feeder cattle opened up down $3, fat cattle down about $1.50 this morning. So not all that surprising. I'm sure there was some computers trading with computers, push this thing down. We're going to settle pretty close to, or we did settle just about, I would say, close to unchanged. Your March feeders were down 67 cents. Your April fat cattle was down 47 cents. But some of your back months showed some positivity. Hogs just kind of traded sideways again today, really trying to find some direction here at that $70 to $71 range. It's been tough to go much higher in the February contract, but there seems to be some support with this cold and lower weights.
All right, Tyler, lots of great information today. For those of our listeners who'd like to get in touch and learn more from the folks at agmarket.net, how can they do that?
Look us up on the internet, agmarket.net. All of our contact information is there. There's probably a broker in your backyard. Look up, find them, give them a call.
Great talking with you as always, Tyler, and we look forward to hearing more great analysis from you soon.
Thanks, Riley. Take care.
That again was Tyler Schau of agmarket.net. Let's take a look at how those numbers close through the market window at iowaagnet.com.
March corn up 1/4 cent at 4.45 3/4. March soybeans up 11 even at 12.24 1/4. March soybean meal down 70 cents at 3.55.80. Soybean oil up 1.26 at 48.16. Chicago wheat up 3 1/4 at 5.96 1/2. Kansas City hard red wheat down 1 even at 6.07 even. Minneapolis spring wheat up $7.50 cent. And March oats down 1 1/4 at 3.78 1/2. On the Merc, February live cattle down 60 cents at 173.77. March feeders down 67 at 231.27. February lean hogs up 17 cents at 70.92. Pork cutout up 20 at 85.60. And February class 3 milk up 7 cents at 15.86.
And that's been a check of the markets here on Ag Matters PM. We're going to go ahead and take a quick break to hear from our sponsor, the Iowa Soybean Association and the Soy Checkoff. When we come back, I have some of today's latest ag news headlines. This is Ag Matters PM.
Iowa Soybean Association is driven to deliver for Iowa's 40,000 soybean farmers. We're proud to provide objective agronomic research, a helping hand with soil and water stewardship, and timely industry news powered by the Soybean Checkoff. Learn more at iasoybeans.com.
Welcome back to Ag Matters PM on the Iowa Agribusiness Radio Network. I'm Riley Smith. In today's Ag News headlines, Ag Secretary Tom Vilsack announced a pilot program to allow more cattle producers and meat processors to access better markets through the USDA's official beef quality grading and certification. The remote grading pilot for beef developed by the AMS matches simple technology with robust data management and program oversight to allow a USDA grader to assess beef carcass characteristics and assign the official quality grade from a remote location, reducing costs and location as barriers to participation in the voluntary grading service. Vilsack said, quote, on average, a beef carcass that grades as USDA prime is valued at hundreds of dollars more than an ungraded one. But the costs for this voluntary USDA service often prevent smaller scale processors and the farmers and ranchers they serve from using this valuable marketing tool. Consumers and buyers and sellers of beef relying on USDA quality grades, including Prime Choice and Select, to indicate quality. In other news, around this time last year, I spoke with Ficke of Grazemaster about their partnership with Agoro Carbon and the carbon market programs they offer for livestock producers. At last week's PFI annual conference, I caught up with Del about how those programs have done over the past year.
Sure. Well, the program has been a huge success. I mean, we've been all across the country. We're getting good acres, getting quality carbon acres. We're helping these farms and ranches actually add some profitability in a different way. And so, first of all, we need to thank all the people that have already come on board with the Agoro Carbon side, and then everything they're doing with the Grace Master side too, that we're trying to build community farms and ranches, things like that. It's a beautiful time to get into the carbon deal. It's not snake oil. It's a real thing. Just because you can't see or touch it doesn't mean that there's not value to it. And it's really, kind of what's coming down the line.
Ficke also ran through once again about how those programs work out for livestock producers.
It really is easy. I mean, there's three things on the pasture rangeland side that that are very obtainable, and they're going to add profitability. With the carbon side, and even without the carbon side, it's going to be the step in the right direction for soil health. So rotational grazing, more animals, short amount of time moving off, really get that animal impact, that distribution, that manure and urine and hoof action that really makes a difference. It's really one of the biggest keys to soil health, and a lot of people are getting to see, like Agoro has, there's really big value in that. It's a nice clean carbon source. It's been there forever. We're making it better. Secondly, they can add some diversity to that grass. We add a lot of clovers, things like that. And then lastly, they can add some type of nutrient for them, if it's doable with their topography, and really kind of kickstart that grass in a little different way. We use a lot of hydrolyzed fish, things like that, in an all-natural way. We want to stimulate that soil. All that equates to sequestering more carbon, which means more money for the people that are signing up.
And finally, today, the Clean Fuels Alliance America welcomed EPA's release of public data for the Renewable Fuel Standard, including final production volumes for 2023. EPA's data shows that U.S. production of biomass-based diesel, including biodiesel, renewable diesel, sustainable aviation fuel, and heating oil, reached 4 billion gallons in 2023. Both domestic production and use of advanced biomass-based diesel grew by 1 billion gallons in 2023 compared to 2022. Kurt Kovarik, president of Federal Affairs for Clean Fuels, said, quote, "The clean fuels industry achieved what EPA could not be done, namely continued growth of advanced biodiesel, renewable diesel, sustainable aviation fuel, and heating oil from sustainably sourced feedstocks." In June of 2023, the EPA finalized renewable fuel standards for 2023, 2024, and 2025 that provided only moderate increases in the biomass-based diesel and non-cellulosic advanced volumes each year. EPA established a mere 60 million gallon increase in biomass-based diesel volumes for 2023 and only a 530 million gallon increase for 2024 and 2025. Clean Fuels advocated increased growth of 500 million gallons for the biomass-based diesel category each of the 3 years. Kovarik added, quote, "Our industry, including producers, oilseed processors, fuel distributors, and marketers, has made significant investments to make clean fuels available to more consumers and rapidly decarbonize heavy-duty transportation fuels, including for aviation and marine markets. EPA's data demonstrates that the rapid, sustainable growth we projected is being achieved. Clean Fuels and its members remain extremely disappointed that EPA refused to recognize and support sustainable growth of biodiesel, renewable diesel, and sustainable aviation fuels." And that's all we have for news headlines today, and that also brings us to the end of this episode of Ag Matters PM. You can find all of our content on our website at iowaagnet.com. Also follow us on social media at Facebook, X, LinkedIn, and TikTok, and find our video content as well as previous episodes of AM/PM on our YouTube channel. Make sure you subscribe and hit the notification bell to see when those videos go live. Don't forget as well our free twice daily market podcast on Apple, Amazon, Google, Spotify, and Podbean. From the Iowa Agribusiness Radio Network studios in Des Moines, I'm Riley Smith. On behalf of Mark Magnuson, Andy Peterson, and Dustin Huffman, we thank you for watching. This has been Ag Matters PM.